The S&P made a lower low during today's trading session, closing down 1.78% with another move into our lower dealer cluster zone. We're still in negative gamma exposure territory. However, I did notice that we crossed above the whole moving average. I'm taking a note out of Sean's playbook. Oftentimes when we see the price action cross above the whole moving average, which in my chart is the yellow line here, we'll see a reversal in momentum, even if it's just temporary. And that actually happened today in the last hour or so of trading. We saw a cross above here, and you can see the whole at 57.1201 on the S&P. We're still in a little bit of an uncertain zone, of course, bouncing off of our lower dealer cluster, as I mentioned, in quite deep negative gamma exposure territory. The zero gamma line is all the way up here at 59.40. So that's 200 points higher than where we're currently trading. And it's oftentimes in these deep negative GEX environments where we see the steepest reversals. So we are on reversal watch. However, a number of things do need to happen before we can get a confirmation. One is that we need to break above this downtrend line. And we talked about this in yesterday's video. Somewhere around this 5,800 to 5850 range is going to be a crucial zone for a potential breakout. Another thing I've noticed on the S&P is the large gamma exposure concentration, which remains at the 6,000 strike. And this is due to continued sizable volume coming in. Today, this was just under 50,000 contracts, but in previous trading sessions, there's been a lot larger volume in the options market coming in at this 6,000 strike. We also noticed everything from 5,800 to 5,900 also seen large volume growing at these major strikes. So putting all these factors together, our lower dealer cluster zone technically starting to see a little bit of a reversal forming, as well as volume and gamma exposure at higher strikes. I think there are a number of factors starting to point to a potential reversal. But I think either way, volatility is going to be relatively high for the remainder of this option cycle, which ends in the March 21st expiration.
Thanks, Anthony. Very choppy conditions on an intraday basis lately, wide range. And yesterday with VVIX closing down almost 9 points, that was the first time that had happened in a while. And I thought that was a positive sign for the market. But of course, here we are, and the VIX and VVIX reversed back up again. One thing I wanted to point out about the VIX itself, which I find interesting, even though we still have this GEX at 30, it's not as significant as what we see at 25 and at 24. And particularly today, look at the volume that we saw at 20. Yesterday we saw volume at higher strikes, and that actually ended up being a leading indicator for today's higher VIX prices. And so will today's volume at lower strikes mean that the VIX is down soon? I don't know, but I think probably the odds are higher since we're seeing that.
Thanks, Sean. We've been watching Bitcoin very closely, and it's actually hanging in there pretty well and has held the lows that we saw back on February 28th, and we made a higher low on March 4th, which was this past Tuesday. So trending in the right direction so far for Bitcoin. We've got the largest gamma exposure concentration at the 100,000 strike. Big volume coming in today at the 108,000 strike, and this was actually the all-time highs going back to mid-January. So some really interesting activity happening in the crypto markets. This is one of our favorite gauges to measure risk on sentiment. And a lot of times we can get a little bit of a precursor move in the crypto markets before we see that spill over into some of the risk on plays in the equity markets.
All right, I've got one more note on the broader market, this time looking at the Dow Jones. So we'll look at DIA, which is the ETF that tracks the Dow stocks. The Dow has been showing us positive divergences at various times, and sometimes leading us out of declines first, the Dow, and sometimes IWM as well. And interestingly, today we saw an improvement in net total GEX from negative 25 million to negative 15.5 million. So it is a positive change. But if we go up to our GEX levels chart, I just wanted to point out that DIA did not make a lower low today compared to 2 days ago. And also we see most of the volume at higher strikes, 443 and 445 were the favorite strikes of the day. So this is something to keep an eye on, because we might see DIA and potentially IWM showing some earlier strength than other indices to signal that we're on our way back up again.
Thanks, Sean. Next, I want to take a look at Microsoft. Microsoft actually hanging in there today, only down 1%, with a lot of other mega cap tech names down 4 and 5%. So a relative outperformer today. We saw Microsoft actually bounce here a couple of trading sessions ago. This was the morning of March 4th, and that bounce has been holding. We've got the largest positive gamma exposure concentrated at the 420 strike, and we also have our year-to-date anchored VWAP is at 415.08. So I think this range between 415 and 420 looks like an interesting potential target, especially if market momentum comes back into play. This year-to-date anchored VWAP line has basically been the identifier of bullish and bearish trends. You can see following the first week of the year, Microsoft fell below this anchored VWAP and traded below that for about a week before rallying back and seeing a resurgence of that bullish trend into the end of January. Ultimately, though, when this broke at the end of January, and we have basically been in a bearish trend ever since then, there was an attempt in mid-February to get back up to that line, and I think there will be another attempt to get back up to that VWAP line here in the coming week or two. We also saw the volume in the options market skewed to the upside. So we're basically trading below 400 and volume from the 400 strike all the way up to the 420 strike. So I think there's a number of factors here at play that gives weight to the probabilities of a move higher for Microsoft over the coming week or so.
All right, this one's going to be short and sweet. Let's look at Netflix. Had a big drop today right into the green dealer cluster zone. That's our lower zone where we expect dealers might become buyers, and that level happens to be a 900 for Netflix. So we see a lot of volume at 1,000 today. That marks our upper dealer cluster zone. It makes sense that the Keltner channel at the lower end would turn down, partly attributable to this sharp move down in price. But we still have this upper channel pointing up, and so that indicates, potential for some volatility back in the other direction. Sometimes if we're in a really strong downtrend, you'll see all three of these Keltner channels all pointing lower and to the right, and that's a strong downtrend that I would not want to be messing with. But in this case, we have a sharp down move in what looks to be potentially a sideways consolidation pattern. So Netflix at 900 looks appealing to me, with 1,000 as the potential upside target. And a lot of that is concentrated on that March 21st option expiration date.
Next, GLD having a pattern opposite to what we're seeing with a lot of stocks in the market. Actually, the year-to-date anchored VWAP holding as support, and we've got large gamma exposure to the upside. We've been consolidating in this zone between 265 and just above the 270 strike over the last month or so, and we're starting to see big volume coming in at these higher strikes as well. We've got large gamma exposure at the 270, 275, and a little bit growing here at the 280. So I like seeing this big volume coming in at these higher strikes. I think this consolidation here is about over, and it would be interesting to see a breakout above 270. And with this GEX growing at 275, I think there's a good chance that GLD could hit that level in the next couple of weeks.
My last one today is going to be XLE, which tracks the energy sector. And we have this big negative GEX cluster at 85. I'll also note, we'll scroll up here and look at our historical GEX. Yesterday, we were really close to reaching an extreme negative reading. So for those that are new to the channel, these extreme readings can be potential contrarian bounce signals. So XLE definitely meeting that definition, and also reaching the lower dealer cluster zone. So this is where we start to become interested in buying stocks. We saw pretty good volume at 90. And our upper dealer cluster zone is way up here at 105. These levels may shift in coming days, but as it stands now, and based on the chart and being at the lower Keltner channel, showing some relative strength today with a green candle, this looks positive to me from a contrarian standpoint.
And if you want to access our gamma exposure dashboard and our option flow analytics tools, as well as our algorithmic trading strategies, which we just rolled out this week, head on over to geeksoffinance.com. You can sign up and become a member. Members also get access to our premium channels in Discord. You can follow along with all the moves we're making, and we've got a ton of great traders in there sharing their own ideas and strategies as well, so you don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.